This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless. Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Robin, CEO of Earnix. Robin, pleasure to meet you. How are you doing?
Very well. Good morning to you.
Good. And yeah, I apologise. We're very much doing this in the afternoon, but the rules of the podcast is this will go out in the morning, so it's good morning to everyone that's listening. I think it's always indulgent of me to even put a time frame on it because podcasts are by nature something you listen to whenever you are. So, but that's how we like to start. So, Robin, thank you very much. This is one I've been looking forward to, and it's a rare treat. So normally we do a bit of prelude, but you and I have only just met 10 minutes ago, so anything could happen. So I'm excited about that. Well, Robin, before I dive in, it'd be really good if you could introduce yourself and obviously, the Earnix business for those that aren't aware.
Yeah, so I'm Robin Guildford. I'm CEO here at Earnix, and I've spent something over 25 years in financial services generally, both as a practitioner and on the technology side, working on digitization and digital transformation of various pieces of the business. So across capital markets, banking, investment management, and insurance, and hopefully that gives me a bit of perspective, understanding of what we're doing for our customers.
Amazing. And then, so let's dive in. Earnix is a business I've been aware of because of kind of the insurance side. It's definitely a broader offering than that. We're obviously going to focus a bit more on insurance today. But who are Earnix? What is the Earnix business?
Yeah, so Earnix is a multinational team who see insurance for what it is and what it could be, and want to help get it there. And so what we do is we offer a unique software platform in the sector. We're actually creating a new category, and it's the category of dynamic end-to-end AI-based software as a service. So that's a bit of a mouthful, but what we do is we help insurers to react almost instantaneously to either external market demands or to internal operational needs. And we do that in what is, after all, a regulated context. And so, when customers use Earnix, they can compete and grow, they can win in their markets, and most of all, they can grow while remaining profitable over the full cycle.
Yeah, profitable growth has become trendy again, isn't it? It went out of vogue for a bit in the sort of insurtech heyday a few years ago. That's really helpful context, and look, loads of kind of I want a buzzwords makes me sound like you're using them flippantly, but there's a lot in there. I think one thing that comes to mind when I'm thinking about Earnix and looking at the business is personalization. It's a massive theme of the way you describe the product. It's a massive theme in its capability. And one thing that might be obvious, I was thinking, why is it important? Why is this drive towards personalization important in the context of like insurance or financial services?
Yeah, I'd perhaps reframe it a bit as the need to be both dynamic and very fine grained. So to get exactly what you want, exactly when you want it. We came out of a lot of pricing decisioning and so on, making sure that each customer is paying a fair price, which ends up being good for the customer and the insurer. But we do much more nowadays, as you point out. And everybody wants those kinds of decisions to account for their personal particular needs and circumstances, which also change over time. And that's where the dynamic nature becomes really important. But also insurers, they have to accommodate changes in their costs. Insurance is funny because your revenues when you write a policy, you have no idea what your costs are going to be. Well, you might have some idea, but you're frequently wrong. Those costs vary. And we saw a major example, what we as economists call a natural experiment During the pandemic, everybody stopped driving, claims went down, costs went down. Everybody started driving. Claims didn't just go up to the previous levels, they overshot 20, 30, 40% higher than before. And that's bad enough when the frequency goes up, but the cost of those claims went up too, labor, parts, for heavy crashes and so on, rental cars and so on. And so the problem is when that happened, a load of insurance carriers, agents, brokers, they had combined ratios over 100%. For those who know, that means you're losing money. And, you can do that in a year, but you don't want to be doing it for multiple years. That ends up being bad for the industry and bad for the consumers. And so that is why this ability to be dynamic and fine grain is so important. It really matters to the scale of the industry, the success of the industry, and to customers getting the coverage they need.
And just for sort of clarity, the software and services you offer, they allow personalization on both to your customers, the carriers, etc., to personalize kind of how they want to interact with the software and how they want to use it, but also it enables them to offer personalization to the end consumer, the buyer of insurance.
Indeed, yes. So we work with all insurers, whether they're carriers or brokers, agents, whatever. And we allow them to provide that, that super fine segmentation all the way down to individual customers where that's warranted and required by the market.
This may be a question more for your customers than you, but I thought it was an interesting point. I bet this is probably me with my slight axe to grind. In fact, I made quite a show of it. I had quite an interesting interaction with my insurer. I won't name and shame them here because I did it on LinkedIn and I thought that was a bit unfair at the time. But I went to renew mine, and we're a small business of 6 people. We're an insurance search business. We've got a US insurer that covers our policy, but now we're doing more work in the US. They said they wouldn't cover the expansion into the US, and when they asked what we recruited for, we said insurance professionals, and they said, "Oh, we don't cover that." So I had a US insurer that wouldn't cover me in the US or for recruiting insurance professionals, which I thought was funny. However, the sort of personalization, I was asking, I had a question really about the kind of SME, SMB segment, depending on which side of the pond you are. This appears like the kind of like lost middle of personalization. It's like consumer grade insurance seems to personalize quite well, very kind of large enterprise seems to, but that kind of lost middle, when do we think that's going to catch up? Is it when the software gets there so we have economies of scale, or is it just I don't know. I wondered what your take on was with the kind of platform.
Yeah, I think that's a really good question. When you look at the large personal lines insurers, right, they've been sort of forced to apply technology to the problem of personalization because nothing works unless it's at scale. And so I think it is definitely the case that the consumer pull, this desire to manage your life from your cell phone if you possibly can, driven technological approaches. And obviously we've been beneficiaries of that. And frankly, I think a lot of the early pull that we saw was on the personal line side. At the complete other end of the spectrum, if you've got major FTSE 100, Fortune 500, whatever kind of companies, those guys, they're going to the Aon, Willis, Marsh Mac of the world, in order to get a very bespoke service, right? Bespoke in that Savaro sense. It's an actual person and they're going to use judgment and all the rest of it. In the middle, though, what we're seeing actually is over the last, I would say 18 months, we've seen significantly more pull into that SME, SMB type of marketplace. And actually, it drives interesting new demands, business owner policies, right? Sort of thing you're talking about. It's a bit of commercial motor and a bit of commercial property and maybe some employee liability and cyber risk and all these other things. Well, it turns out that very few carriers actually write and carry that risk for full life cycle across all of those different types of product. And so what they're doing is, a lot of these are essentially bundles of things. And so when they are trying to come up with a good offer, underwrite risk appropriately, and then price it, they're dealing with some things where they're looking at, we're carrying this risk all the way, claims, servicing, the whole thing. And this other thing, we're essentially taking an agency or broker type relationship. So I'm optimizing for a point in time. Those kinds of bundle optimization are super interesting. They happen to be one of the kinds of optimization that are particularly suited to machine learning. And I think that what we've seen with a bunch of the players in the UK market and the US and beyond indeed, has been that they're catching up pretty fast because they're able to learn from that personal lines experience, but really bend it to their particular requirements.
Yeah, because I always think that with a kind of that small, business owners policy is a great example. It should be more of a kind of personalised type experience because that's how it really operates. I mean, we obviously live in a company, but it's my business. It's me making those decisions, and actually, I always reflect on this in that we can't get away from our personal buying experiences when we're making business decisions. So I buy my own insurance. I've unfortunately had to claim a few times. I make other buying decisions related to sort of finance, and I'm always blown away by how much easier and better my experience is on the personal line side, as opposed to kind of being a small business owner. But I'm spending a lot more money as a small business owner on these products, and I'm saying, well, the service doesn't match what I'm experiencing. Now I know it's a kind of volume value equation, so the aggregate of the personal lines market is obviously therefore bigger than this target market, but it feels, I think, as a consumer, you just feel shortchanged because your experience isn't quite matching the world as it's evolving. I wanted to talk to you about the different solutions that Ernix offers, because as you touched on, there's everything from intelligent IT to operations to pricing, etc. And not knowing the full history of Ernix, I was just interested to see sort of over the course of that Ernix journey and the evolution of those solutions, what your carrier partners wanted. How has that changed, and how is that changing in the most recent time?
So, we started out, actuaries, underwriters, economists, we started out solving a lot around pricing, but I'm very grateful to the team in that they really built this with a platform view. So what I'd emphasize is we offer actually a single platform, not just a collection of disparate apps. We offer a single platform that covers either a single need or multiple needs. And because it's a single platform, that allows us to get those decisions that need to happen, or the results of those decisions, in market extremely rapidly, in essentially real time. Although, as we know, insurers need, for various reasons, to have multiple eyes on everything before they promote something to the next stage. So, I think what we've seen is it's a little bit like, classic market adoption curve stuff, Everett Rogers or Jeff Moore or whoever. And we've seen a bunch of the innovators and early adopters kind of morph into early majority, late majority in a bunch of these markets. But, we started in pricing. We saw a lot more demand from the actuaries and actually demand to be able to pull in their own modules and own models, because most carriers, they have one particular area, or most insurers of any kind, they have one particular area where they've got real differentiated expertise, and we wanted them to be able to make use of that, but do so in the same framework and the same process. We've seen, a lot of pull through on the underwriting side. Underwriting become much more analytical, and so you see this complement of underwriting analytics with underwriting workbenches, the analysis and the process coming together. And then, of course, as markets have evolved, UK market's a good example with the whole comparison website drive on the personal line side. It's driven an intense need for volume, but you don't want to just stumble into that volume. So you need a high-speed rating engine, but you need the loop back. So you're constantly tracking and analyzing the results and adjusting, in near real time. And so we've definitely been sort of, pulled in to the process, but nowadays we serve all of the sort of risk cycle professionals, actuaries, underwriters, pricing teams, rating teams, and the people who are responsible for the reg reporting and so on, if they get a question from internal compliance or external regulators.
That scalability of solution is very evident. I was looking on some of the literature and not just a website, but more kind of the conversation is constant. Personalization is a word I've seen a lot, but the scalability of the solution and the single pointness of it. I was wondering how you counter legacy tech as you're trying to implement with customers and legacy tech stacks, and how does that essentially impact your ability to serve customers? Is there something that still gets in the way?
I wouldn't actually say it gets in the way, but we definitely had to find ways to accommodate that and to leverage it. Look, this is a huge industry, and some of the individual players are huge. So clearly, scalability, reliability, accessibility, those are not nice to haves; they're must haves. Actually, last week, Customer Summit, I was actually reviewing some data with my CTO, and we're running at an annual rate of about 3 billion quotes by any standards, significant volume, no joke. But legacy doesn't always mean bad, right? It probably means it works for what it does, but it probably also means that it's tough to shape that to change and be flexible. So we built out the platform to be, for want of a better term, bring your own, bring your own models, bring your own data, bring your own applications. And so we have the ability to work with the pieces of that legacy technology that are still valuable, but also, if relevant, to manage transitions away from them. And so, because we take that platform approach, that gives us both scaling for billions of quotes and the ability to leverage the good stuff that customers are already doing. And we do so in a way that focuses on time to value. So unlike the sort of classic core system or other, long-term projects that you see in insurance, we're talking about months for time to value, not 2 to 5 years.
Because the legacy, that's a great point actually. The legacy tech's not always bad, and I think it's always that legacy is bad. And then the other kind of misconception, which I was listening to a conversation, an event we ran called "We Are InsurTech Women," and one of the kind of points made by Romney, the CFO of Boltec, was about any business that's had an acquisition will have a legacy tech issue. You can't not make those positions, and you've got to kind of all blend it together. So I'm always intrigued about the magic of knitting all these things together, and that is the complexity of these very large enterprise level, growing, ambitious businesses. All obviously wrapped in the bow of this is a regulated industry, so you've got to be particularly careful. So it's a really interesting challenge to unpack. And I suppose building on from that, what I wanted to ask you, it isn't just insurance that obviously Ernix serves, banking, financial services partners, and obviously your experience as well. We love talking on this podcast, and I think we love talking on any podcast related to insurance about insurance is behind in its evolution as opposed to banking and financial services. And I just really wanted to get your lens on, is that true in your experience? And perhaps, how do these markets approach your services differently as a result?
So certainly, look, at Earnix, our primary focus, 90+% of our business is in insurance. But there are definitely differences between the segments within the sector, so to speak. As you say, having worked in other pieces of the sector, what I would say is that external factors, in many cases, forced change earlier in some of those other sectors first. But, that change doesn't happen uniformly. It's a little bit like the expression, the future is here, it's just unevenly spread. I think you see a bunch of that. So look, phone apps and all the rest of it, definitely already here. Some of the sort of true re-engineering and transformation of internal processes, not yet here. What we did see, and I think capital markets is a great example, what we saw was this convergence of real-time and straight-through processing in capital markets, plus changes in regulation, actually lit the blue touch paper on 20 plus years of dramatically faster innovation than you'd ever seen. It went from guys in pinstripe suits and bowler hats, and a delightful but sort of semi-professional approach to the business, to people taking those jobs, being highly quantitative about it, very strong technology support, and instantaneous trading around the world and same-day settlement. That was just not the way it was before. And I think what we're seeing is a bunch of the same kind of opportunities here, dynamic end-to-end systems. And I think, the thing that is somewhat different in insurance is, we don't just spend the whole day thinking about risk. Everybody in financial services thinks about risk. In insurance, we don't just spend the whole day thinking about risk. We spend our whole careers thinking about it. It's the very core of business. And so, humans are pretty good, especially when they've had a lot of training, pretty good at evaluating risks, quite as good at evaluating the risks of not doing things. And I think that can be a bit of a trap. And insurance, still has some work to do on change management in order to be able to really sort of confront the opportunities they provide. Although I would say that on a global basis, you see those insurers that are prepared to do that, to take a portfolio approach and so on. They end up leapfrogging traditional players, and you see a bunch of that in the agency market in particular, where you see huge players grow up, not overnight, right, but over a 20-year period, up against these 150-year companies, and they're right in the winner's circle.
Yeah, the portfolio piece is interesting. I mean, I sort of start to reflect, and the first role I wanted, some of my family worked in investment banking, and I was talking to my cousin, and he said, yeah, every time he lost a trader, he gained some quants or mathematicians, and he's very much of that old school. And I don't even think he's got a degree, and he went into that, and it was all relationship driven and the evolution of that. And I remember talking to him about that when I was at university, but that was obviously 20 years ago. So that's a reflection of the time ahead. But we look at what's happening now, and we're a research firm, and we work with insurtechs and insurance companies, and now the sort of growth of portfolio underwriting is come to the fore, again, where people are looking at multi-line. And that was, particularly in London, it's really interesting. It's quite a hard sell, but I just ask people to reflect on the tools now available. So the tools are now available so that knowledge is to hand, data is to hand, and actually the people that can understand data and take a data-driven approach to underwriting are able to write cross-class and look at net new products and the evolution of new products. So it's that kind of opportunity as well. But I do think we'll need to go for a talent evolution because the skill sets that we need will be different. And, just wondered if your reflection on that, being a technology provider gives opportunities, but what do you think it means about the profile of people that we have in the insurance industry? Do you think it has an impactful change there?
I think it does. Look, I got into capital markets as, not because I already had relationships. Right? I got into capital markets because I was a mathematics, econometrics kid, right? Mm-hmm. So quants in capital markets are basically like actuaries in insurance. High personality guys, all of us. And that was a whole new skill set, right? And I think frankly, there's a huge opportunity for very different career paths and pace of evolution for those individuals in those analytical roles, and particularly with those analytical skills. But I also think you're going to see a lot more analysis in some of the other things that were much more the judgment, relationship, etc. type of factors. Now, it doesn't mean it's going to be everything, because clearly we're in business, and as I say, in our own business, right, we have to have great technology, but in terms of success is 20% technology, it's 80% psychology, right? It's about the people. But I do think that everything ends up being infused with knowledge and awareness of data. I think it's going to pull in even more demand for sort of data science, broadly written. And certainly it's going to change the profile of people you hire. But I think it's also going to mean that the systems we build have to be able to help with democratizing access to that data science. It's all very well if you're going to talk in differential equations and all the rest of it. If you want to go talk to an actuary, those guys, they speak Greek, or at least it kind of looks that way when you look at the whiteboards. But, the underwriters speak Latin. And and maybe the pricing team speaks German or whatever, so you have to be able to translate, and you have to be able to design and build tools for those different personas. And frankly, we spend a lot of our time making sure we have a platform that serves them all, making sure that we have a data model that accommodates all of their different needs, but particularly making sure that the user experience, the interactions, are what each of them would expect in their own personas. Because if you're essentially trying to do rating work with an actuarial tool, it's a long and painful journey.
I think that language piece is probably the thing that we get asked about the most, because when we work with startups and scale-ups, it's that we need people that can talk to insurance people. They like to put everyone in a bucket, insurance people in quotes, whatever that means, and then technologists. But it is something about the skill, and I see that time and time again. And it sort of started me thinking, going, that's just a skill everyone's going to have. Like a lot of people have said every business is now a technology business, and whether I quite agree with that, I understand the sentiment, and certainly I think everyone has to be comfortable talking to non-technical and technical people in different markets. But it does seem to be that's going to be the kind of missing source for success. And on that note, looking at your personal profile and your personal career history, you obviously you've been involved in some really sort of hyper growth, big growth companies, and then successful exits. I just wanted to sort of reflect on that, and probably team, what are those kind of key tenets of a business that's going to have that hyper growth or that kind of exit opportunity? And I know, look, market conditions and all these things, but in terms of the things you can control internally, do you think thematically there are these core elements, whether it be culture or whatever, that kind of make it successful?
I think first start with a big problem and look at some of those intractable problems, I think, because if you have big problems, and particularly the ones that people have not been able to solve, they're likely to ascribe a lot of value to moving the needle. Secondly, I think when you're looking at big problems, it's very unlikely that as a single individual, a single team, a single company, that you're going to single-handedly, shift the axis of rotation of the entire multi-trillion dollar, pound, euro insurance industry. So take an ecosystem approach, get some allies. And that then leads to this slightly paradoxical thing where you want to be open-handed as you build a business. You need to make sure that you make enough room for other people to make money as you make money. And, and that's a difficult balancing act, because especially when you're much more in that hand-to-mouth kind of phase, it's it's hard to give up that extra dollar or pound of earning, but it does tend to pay you back. And so I think that informs a lot of things that we do. It informs how we focus. We are very much we're a technology company. We're a software company. We rely on intellectual capital, but if we have a choice of keeping it in someone's head or putting it in a framework or doing a service engagement or putting it in the software, we're going to put it in the software 99 times out of 100, because the leverage is better, the access is better, and that's what our skill set is designed to do. And we're not built as a services company or whatever. There are lots of people out there who are, and they can be our friends, and that's good for them, and it's good for us, and it's actually good for the customers, because you get people doing what their highest and best use is. They're what they're absolutely world champions at. And then I do think that culture and alignment has a fundamental role to play. We spend quite a lot of time around making sure that our team members know what our vision is, about understanding what their department and indeed their own daily work contributes to getting to that vision. We focus a lot on values, and one of the key values that we get to exercise a lot here is really about being people first. We wouldn't be here without our people. We hear this all the time from customers, who say, God, it's really your people that make such a big difference. I mean, it's great technology, but they always come back to the people. And I think, if you support the people, if you develop the people, you get them comfortable. And I think that's a big key to truly being innovative, not just episodically, but over the long duration. And we don't quite know where innovation comes from. It definitely doesn't come from your email inbox. You need time and space, and probably some more time, and the ability to have different experiences. And so we really try to foster that in our team members. You see quite a lot of internal mobility, different teams, different tasks, different projects, and even different locations. And so, I think for us, that's the key. But we make sure that those vision and values, they translate all the way down to what are the methods people are using. Do they understand what their key objectives are? And how do we make sure that we're helping them overcome any obstacles in the way?
I love what you said there at the end about the sort of the articulation of someone's personal journey fits in within the sort of broader context of where the business is going, and allowing that kind of mobility. And I think it can get lost in the growth of the company. It's like, well, the company's going this direction, that's all good, but at the same time, you have these brilliant people, and I think the best businesses that I see and the fastest growing with the most velocity, you actually look at the movement of the people in that business. It tends to be quite fluid, and that works well in people that are comfortable in fast moving environments tend to look for that. And how can my role change and continue? I can continue progressing and help the company progress as well. Really conscious of time, and it's flown by, and here we are at the top of the half hour. But I wanted to kind of ask you the most important, probably last question, which is always, what's next for Ernix of all the things you've got? Perhaps in the next 12 months, what new lands are there to conquer?
Yeah, I think that this is a business operating at scale. You heard me talk about 3 billion quotes a year, and that's driven by having customers across 35 countries, which is an opportunity that we see across personal lines and commercial lines and P&C and life and beyond. And it's all on that same platform, which is really a unique position. Bunch of people who serve those different markets with different tools. Our focus in the next few years, I think, is deepening our footprint in the current markets, being selective about which markets we add, strong organic growth, and frankly investing in the product, because we see that pay us back time and again, and continue to maybe marginally improve profitability. But other opportunities are going to pop up, and we're going to be ready. So, for example, new segments pop up. Today, we have about a dozen pet insurers. A couple of years back, it was zero. We've seen, half a dozen in travel, and recently a lot of activity in commercial lines, in specialty, in excess and surplus lines, depending on the different geographies. We really believe that this is a must-have category of software that we're building that complements those core systems like the policy administration systems. And it's different in terms of capabilities. It's different in terms of focus. We can help insurers compete and differentiate and grow and operate. Then, I think that's obviously helps us build a good business, but it helps the insurers and it helps them generate the return on capital that's going to mean there's plenty of insurance capacity. And one thing I think we have learned about the future is that it's going to be unpredictable. There are existing risks that have become unpredictable, climate and so on, but also just completely new stochastic risks. And without plenty of insurance capacity, the world's going to be worse off without a vibrant insurance industry.
I love that. What a great place to end it on, a bit of a trumpet call for the insurance industry. Robin, thank you so much for being a guest on the podcast. It's one I've been looking forward to and it didn't disappoint. So, thank you so much for your time.
Thank you. Talk soon.